BlackRock is facing a situation far more dangerous than anything it has publicly admitted, and a newly leaked internal document makes that clear. What makes this moment even more unsettling is that the public was never supposed to see these warnings. For years, BlackRock has been seen as the ultimate stabilizer, the one institution that seemed immune to financial storms, the one asset manager that always came out stronger, and yet this leaked report exposes something completely different. Billions in unrealized losses. Liquidity mismatches, stressed credit exposures, weakening bond portfolios, and structural risks that undermine the core foundation of BlackRock's empire. The mystery that now emerges is simple but chilling. If BlackRock knew these risks internally, why was the outside world told a different story? To understand the seriousness of what's in this leaked report, you must go back to the origins of BlackRock itself. The company was born from failure, Larry Fink's failure at first, Boston in the 1980s, where a catastrophic miscalculation destroyed $100 million and shattered his confidence. Instead of giving up, he developed an obsession with risk control. That obsession led to the founding of BlackRock in 1988 and eventually to the creation of its most powerful tool, Aladdin, a risk engine now used by governments, pension funds, central banks, and major financial institutions to track more than $20 trillion worth of assets. Through Aladdin and its aggressive expansion into ETFs, bond markets, private credit, and sovereign advisory roles, BlackRock didn't just grow, it became the system. But the leaked document reveals a twist they never planned for the same sea sting. BlackRock, built to control global risk, is now flashing red inside its own walls. This hidden crisis did not appear overnight. Its origins stretched back over a decade to the era of ultra-low interest rates between 2009 and 2021. Those years created an environment where borrowing was cheap, risk seemed muted, and asset prices inflated endlessly. BlackRock capitalized massively on this moment, attracting trillions into its passive funds, credit products, bond ETFs, and real estate-linked strategies. But this period of low rates also embedded a fatal weakness into BlackRock's portfolio, the assumption that borrowing costs would stay near zero forever. When rates surged in 2022 and 2023, that illusion shattered. Bond values collapsed, mortgage-linked assets deteriorated, private credit borrowers began to show strain, and the structural weaknesses the leaked report now reveals began taking shape. One of the most dangerous vulnerabilities developed in private credit, a shadow lending system built on opaque loans, weak covenants, and inflated valuations. BlackRock's growing exposure in this sector was marketed as a modern, flexible alternative to traditional lending, but private credit only appears stable until liquidity disappears. The leaked report exposes internal concerns about loan impairments, delayed valuation marks, and borrowers who have been surviving not on strength but on old, artificially cheap credit terms. In other words, BlackRock is sitting on loans that need to be written down but haven't been yet. Another vulnerability comes from the ETF structure itself. ETFs promise liquidity, but the underlying assets, especially bonds, often cannot be sold quickly in real stress environments. The leaked internal simulations show widening NAV deviations, insufficient underlying bond inventory, and scenarios where ETF redemptions exceed BlackRock's ability to liquidate holdings. This is the nightmare critics warned about for a decade, and BlackRock's internal team now admits the liquidity mismatch is structural, not temporary. Meaning, if investors panic, ETF mechanics could fail in real time. These weaknesses set the stage for the rise and sudden deterioration revealed in the leaked report. BlackRock's success created concentration risk. When trillions of dollars followed the same strategies, the same etchy fees, the same bond indices, and the same risk models, then any shock becomes magnified. Correlations across assets surge, diversification fails, and even small market tremors can trigger system-wide instability. BlackRock's own internal analysis acknowledges that asset correlations approach 1.0 during stress, meaning everything moves down together, destroying the idea that passive investing protects against volatility. At the same time, BlackRock's heavy duration exposure portfolios loaded with long-term bonds became a liability when interest rates spiked. Many funds are facing losses much larger than the public estimates. This brings us to the breaking point. The leaked report includes risk dashboards, redemption simulations, stress tests, and projected loss estimates. The language is cautious but alarming. Several of BlackRock's major fixed income products face significant stress under even moderate outflows. Private credit funds require material downward revisions to reflect real market value. ETF simulations show redemptions exceeding feasible liquidation capacity. This is the kind of language that only appears when a firm knows the situation is far worse internally than publicly disclosed. The fallout from these weaknesses is already spreading. When BlackRock experiences liquidity strain, the entire global market feels it. Their ETFs represent large portions of many major indexes. When liquidity thins, their products magnify volatility, creating exaggerated moves in stocks and bonds. Pension funds, which rely heavily on BlackRock's bond products for stability, now face worsening funding gaps. Governments that depend on BlackRock for risk modeling now confront rising borrowing costs and instability, and retail investors, the people least equipped to understand these risks, are left watching. Their portfolios fall without understanding the structural problems beneath them. BlackRock attempted fixes, but the leaked document suggests these attempts have failed. Rebalancing duration locks in losses. Adjusting private credit valuations reduces AUM and triggers investor panic. Liquidity enhancements cannot fix illiquid markets. Communication strategies conflict with internal modeling. One internal line states bluntly that market conditions exceed the remedial capacity of incremental adjustments, which is a polite way of admitting the fixes no longer work. What makes the leaked report even more concerning is how closely this moment mirrors previous financial crises. In 2008, mortgage securities failed because liquidity vanished. In 2020, bond ETFs broke their relationship with underlying assets during the COVID panic. In 2022, rate shocks destroyed duration-heavy portfolios worldwide. Today's crisis combines elements of all three. Rates are high, debt levels are enormous, private credit is massively expanded, and global liquidity is dangerously thin. The system is more fragile than ever, and BlackRock sits at the center of it. Taken together, this leaked report reveals three critical insights. First, BlackRock is not invincible. Its size exposes it to unique and dangerous risks. Second, the global financial system is far more fragile than the public understands, because its stability depends on institutions like BlackRock hiding their internal weaknesses. Third, the worst damage has not yet hit the public. Private credit losses are delayed, ETF liquidity gaps widen under stress, and accelerating outflows can turn structural risks into full-blown. And now for the warning this report forces us to confront. If trust in BlackRock begins to break, whether through outflows, market distress, or another liquidity shock, the ripple effects will be global. A crack in the world's largest asset manager is not a single event. It is a systemic earthquake. The leaked report is not simply a warning about one firm. It is a warning about the entire architecture of modern finance. So the question we are left with is unsettling but necessary. If the strongest pillar of the financial system is showing fractures, what does that mean for everyone standing beneath it? If you found this investigation important, make sure to subscribe so you don't miss the next chapter of this unfolding story. Like the video to help spread awareness. And comment below, do you think BlackRock can contain this crisis, or has it already lost control?